Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 7th of June. It's been a week of steady progress in the markets on both sides of the pond. Obviously, inflation still remains front and centre in terms of investor concerns. In the States, whilst immediate rises in interest rates do not seem to be on the agenda, there is an increasing possibility that the Federal Reserve may at least be starting to talk about tapering in terms of their QE program. In other words, starting to wind that down slightly. And that's, of course, based on a raft of strong economic data that's been coming through. Certainly in terms of the UK, it's a similar situation. We're beginning to see some bottlenecks in the supply chain, both in terms of raw materials and indeed the labour market. On the plus side, we've had some very strong readings in the manufacturing sector and also the services sector. But of course, the government's latest decision to add countries to the amber and red lists has not been positive for the tourism and travel sectors in particular. That being said, the UK as an investment destination is still benefiting from warming sentiment, and the domestically focused FTSE 250, for example, is up around 11.4% in the year to date. It's still seen as a reasonable destination on valuation grounds, let alone its cyclical constituents within the FTSE 100. So, in the year to date, the Dow Jones is now up 13%, S&P 500 is up 11.6%, Nasdaq up 5.6%, and the FTSE 100 up 9.3%. Turning to next week, it's a fairly light corporate calendar yet again. There are full-year numbers due from AutoTrader, the digital car marketplace, which of course started its life as a print magazine, as some may remember. It's almost being seen more as a tech play these days because of that digital platform. And it'll be interesting to see what sort of demand there is in the second-hand car market at the moment, particularly given the elevated level of savings in the UK population. There's also full-year numbers from the small cap company Card Factory. Shares have had a decent run up, over 50% in the last year or so. This is going to be an update which should tell us something about the split between online and physical as stores have started to reopen. At the same time, expect an update on its own 5-year plan and its current round of refinancing. And finally, also in the small cap sphere, we've got a trading update from Go Ahead Group, the bus and rail operator. This has been somewhat sheltered from any pandemic worries on the simple basis that the majority of its revenues are contract based, and therefore the amount of actual passengers travelling is less of an impact. Nonetheless, it will be interesting to see what Go Ahead's current take is on the passenger numbers, as there's been a slow return to the bigger cities and indeed to the workplace. Thank you for watching. Have a great week.